Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is February 6th, 2025. And today on our call, we have the CEO, Myke Clark from ReVolve Renewable Power Corp. ReVolve Renewable trades on the TSX Venture Exchange under the symbol REVV, and it also trades on the OTC under RVVF. The company is currently trading at 22 cents with about 63 million shares outstanding, or about a $14 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Myke, welcome back. We saw you sitting in a different chair last time, but happy to have you here to talk about a similar sort of segment of this space, but a new company. So ReVolve Renewable Power. We'd love to learn more about it. You've got a presentation deck, so why don't we just get going, and I'll hand it over to you.
Yeah, perfect. Excellent. Thanks, Paul and Trevor. Great to be back. And as you alluded to, relatively new to ReVolve, about 4 months now into the role as CEO, but really excited to join this really strong team. First of all, thanks everyone for joining, and I'll just start running through the presentation here, and then I believe we'll take some questions at the end as well. So in terms of who is ReVolve, as was noted, I'm the CEO of the company, also on the board of directors. Company was actually founded in 2012 and went public through an RTO back in 2022. So relatively young as a public company. We do have a unique approach to the renewable energy industry, one that really taps into what we're seeing now, which is a massive demand for electricity that we're seeing globally. Everyone talks about AI, everyone talks about data centers nonstop these days, really. You can't get away from it. And it's actually for really good reason, especially as it relates to electricity generation. Both of those industries are driving unprecedented growth and demand for electricity. They need it, and more importantly, they need it fast. And traditional forms of generation really just aren't meeting the need for a lot of these industries. And you combine that with traditional manufacturing industries, other sort of more typical customers for renewable energy, and you're seeing an incredible demand in the marketplace right now. And for us as well, we operate in Mexico. We have a significant footprint there, which we'll dig into a bit as we go through the presentation. But one of the drivers we're seeing there is significant nearshoring or onshoring in Mexico, where industrial groups are coming back to Mexico to provide service into the U.S. and elsewhere. And again, the demand for electricity is unprecedented there. And so, simply put, we see ourselves as the future. I mean, we can provide the solution to this demand. We have the ability to provide clean, scalable, and cost-effective energy that's aligned with that increasing need for demand, the demand from these growing industries. So when you look at the actual the investment pitch for us, it is ultimately about high demand meeting low supply. Again, when we talk about AI, we talk about the electrification of everything from electric vehicles to mining equipment to home heat pumps. The demand is only going in one direction, and that supply of electricity and projects is extremely limited right now. For ReVolve, for us, it's about scalable recurring revenue. We like that strong, stable base of high margin recurring revenue from assets under ownership, and that's what we're building out. In addition to the nice growth that we're going to see as well from other areas of our business on the larger project development side. So basically, our customers are myriad. If people need power and they need it fast, we can provide it. And so, as we'll see in the presentation, that runs the gamut from large utility scale projects all the way down to projects for local businesses that want solar on the rooftop and just want to save money on their electric bill. We can pretty much do it all. So we describe ourselves as an independent power producer because that really is the basis of our business model. We own and operate projects, but we also develop a portfolio of projects that we can then either sell later on, or we can develop and own and operate. It's this diversified investment strategy in a relatively small company that I think is unique in the marketplace right now, especially in the public marketplace. You don't see many companies like us that service the number and types of customers that we do. The goal here really is to develop those bigger projects and then recycle the capital from the sale of those into projects that we can own and operate long term. If you think of the type of projects that are out there in the world right now, you have the 100, 200, 300, 400 megawatt size projects which are in the hundreds of millions of dollars of capex. For us, not reasonable to own and operate that at this stage of our development. But we can develop them to a certain stage, sell them, and then recycle that capital into projects that we can own and operate in that sort of 10 to $20 million range, which is really what we're focused on. The proof of concept for this, we've already done this once as a public company, a couple times as a private company. We've sold a large project in Arizona to a group called NG, a large multinational group. We've received about $6.5 million US from that to date, and we're still set to do another 45 to 55 million US in milestone payments over the course of that project's development. And a lot of question we get a lot is, when is that money coming? And we don't have a clear line of sight on it, other than to say it's not 5 years away, but it's probably not 2025. NG is the developer on that, and we'll see milestone payments at notice to proceed. So essentially their financial go forward decision and commercial operation. But the bottom line there is that we have this large receivable outstanding for projects, and it really is proof of concept that we do this, we do it well, and we can take that capital and then recycle it into smaller projects. And then as well, in terms of our business model, absolutely always in the market for M&A opportunities. You'll see historically in the last couple of years, we've acquired some operating assets in Canada and in Mexico. And so we've done it, and our team has done it well over the last couple of years. So this is a bit more detail on that business model that I was referring to in terms of the types of projects and the sizes and who the customers are. When you look at a wind project or a solar project, if you're looking at one that's small versus one that's large, the technical requirements are not too dissimilar. If you can develop a 10 megawatt project, you can develop a 100 megawatt project. The challenge comes when you try to build it and own and operate it, when it becomes a capital question. For us, we develop all of them. We develop large projects, mid-sized projects, and distributed generation projects. So these are essentially projects that we build on the rooftop of usually business customers, almost always solar, and then essentially sell them electricity, reducing their operating costs. And so if you look at the different the development timelines associated with it, those big projects, they take longer, clearly, and there's more of an investment over 3 to 4 to 5 years, depending on the size of the project and the jurisdiction. The mid-sized projects, 2 to 4 years, they can usually move a little bit quicker, because one of the key constraints for big projects is interconnection. So how do you tap into the transmission system? For these mid-sized projects, usually you're tapping into the distribution system, which is essentially what you see in your neighborhood. Much easier to gain access to that system with respect to capacity. And then, of course, on distributed generation or smaller projects, we can basically build those as fast as the customer says yes. So it is a sort of a traditional sales cycle where we talk to the CEO, the CFO, determine what they use for power, and then size a system for them. We front all the capital costs, the upfront costs. All they have to do is sign a long-term power purchase agreement with us, and they just save money. And so again, the sales process is relatively straightforward. If a customer has a lot of a high electricity demand, we can pretty much anywhere in North America provide a good business case and own and operate those assets. And so those are really the sort of 3 areas that we're looking at. And again, ownership are in the 2 and 3 there. Number 1 are the projects like the NG projects that we sold. We'll develop those to the stage where they have the most value for us, and then we'll sell them on to usually a larger developer. And so I've talked a bit about this already, but this is just in one slide, essentially. We are an operator and developer with a nice big portfolio that I'll touch on in the next couple of slides. We are agnostic in terms of technology. We love solar, we love wind, but some jurisdictions work better for solar, some work better for wind. Obviously, the resource is dependent on the geography as well. For us, we believe that long-term renewable energy is where there is significant and substantial growth. It's always going to be a part of the energy mix, but it's going to be a larger and larger part of that mix moving forward. So these are the projects that we have under development and some of the operational projects right now to give you a sense of the sort of scale and scope of our portfolio. The company was founded by a gentleman who's our executive chairman, who is based in Ireland, but also a gentleman who's based in Mexico, which explains our Mexican footprint. So we've been there for quite some time. We have a good presence and a great reputation. We have smaller operating projects in Mexico, what we call our DG, or distributed generation portfolio. So these are all these projects down here. Again, usually rooftop solar. Sometimes they are battery storage as well. And those are just under long-term contracts with the business owner. Operating projects in Canada, we have 2 run-of-river projects here in BC. I'm based in Vancouver, and an operating wind project in Alberta as well. Those generate long-term, stable, recurring revenue for us under PPAs. The BC projects, upwards over 20 years left in them, about 10 years left in the Alberta project. On the development side of things, we have projects that are under development in the US, primarily in the Midwest and West, projects that we've sold in the US, and projects that are also under development in Mexico. So a good broad spectrum. So if we see any of the projects on the utility side slowing down, we can shift our resources to either some of the projects in a different jurisdiction or into smaller projects that perhaps we can get to market faster. So it's a really good broad mix of projects. And particularly for a project this size, you don't often see that, I'll be honest. So the portfolio overview, again, this is a bit more granular detail in terms of the specific projects that form a big chunk of that. The operating projects, again, these projects here are in BC, run-of-river projects. Box Springs in Canada is the wind project by Medicine Hat. And then these large development stage projects, 2 of them in the US, 1 of them in Mexico, that are advancing quite quickly. The 2 in US both have interconnection agreements. So I was talking about some constraints with respect to project development. Interconnection is always a constraint because there's a lot of projects that want to get online because of the demand for power. The 2 US projects right now have interconnection. So right now it is essentially working towards an off-taker or a PPA agreement on those projects and continuing the development work on them. Beyond those, we have a very large pipeline of projects, both in Mexico and the US, that spans solar and wind. Again, that diversification makes a ton of sense, especially when you see, what's going on in the US right now with respect to politics. And we can touch on that later for sure. I'm sure people have some questions about it. But that diversification really helps. The projects that we have in the US, advanced stage, I don't see much risk to them on the wind side, and solar to date has not been impacted by any of the sort of rhetoric coming out of the White House, which is positive. And then on the distributed generation, rooftop solar, most of those projects, a couple of battery storage projects, and a small CHP or combined heat and power project as well, that are generating for us right now on a 12-month run rate about 2.2 to 2.5 million US in recurring revenue. So again, a good, strong, stable base of recurring revenue from projects that are contracted for at least 10 years. End of this month, of course, we'll see Q2 for us. Our year end is June 30th, so the Q1 highlights are what you're looking at here. A really strong increase in recurring revenue. We have recurring revenue or revenue associated with the sale of projects as well. But this first bullet here is really that long-term recurring revenue. And a couple of projects have come online since then as well. So we're only going to see that number grow as we add those smaller DG projects. Each one of those adds a couple $100,000 of revenue a year. And so we're really looking to scale that out because they're great smaller projects that we can execute on quickly. The larger projects we'll see some of the development timelines coming up here as well. But really, the ones that we're going to see the big jump on are big boost are in Alberta. We have a development stage project, 15 megawatts. We have a 50 megawatt project in the US, a wind project, and also a battery storage project in the US. All of those we're targeting ready to build status in 2025, so this year. So a pretty interesting year ahead of us, without a doubt. So what's next for us? Where do we go from here? We are not just a yield co. We are not just interested in incremental growth in revenue, of 10 to 20% a year. We want to grow substantially and significantly and quickly, because we believe there's a lot of market share out there to be grabbed. And so we put out a midterm objective. This is about a 1 to 2 year time frame, I would say, and I would say this is conservative. Obviously, we only tend to put out pretty conservative numbers based on what we believe is absolutely achievable. This would not take into account any potential M&A opportunities that we may be pursuing, and also doesn't necessarily take into account any accelerated development of either DG, distributed generation projects, or some of the smaller utility projects as well. So pretty significant bump that we're going to see over the course of the next year to year and a half with respect to revenue and EBITDA. These projects are all high margin projects, which is quite positive. And so here's a bit of the background to it. So we're not just sort of picking numbers out of thin air. If you look at some of the projections here, this is how we get to that number and how we get beyond that number. The individual projects, so the Bright Meadows project is the Alberta project that we're developing. Primus Wind is in the US, that's at 50 megawatt, and you'll see some of the description there. Vernal is battery storage. And then the distributed generation piece of it is the one that is quite interesting, because we see a lot of opportunity there, not just in Mexico, which is where we're primarily operating right now, but also in the US and potentially in Ontario as well. So again, these are projects that we essentially have a relationship with the business owner, so we can move them quite quickly. As a way of background, the last company that I was a CEO of was an EPC, or a builder of those types of projects in the US. And so I definitely have a lot of experience with building out that kind of business in the US. Excuse me. So I think it's fair to say that a lot of our focus moving forward is going to be on the US as well, while we continue to build out what we are already doing well in Mexico. So a lot of opportunity there. 10 megawatts of distributed generation is 5 2-megawatt projects. So it's absolutely doable, and actually I think is quite conservative in terms of what we may be able to do. So pretty excited about that. When you look at also the sort of the large piece that's outstanding as well, of course, is that large payable on the sale of the projects to NG. The timing of that is a little bit unknown right now. We have a high level of confidence that we're going to receive it. Otherwise, we wouldn't be disclosing it publicly. But when that hits the balance sheet, clearly that comes in as revenue as well. But we don't really model it right now, because it's such a large chunk that I think the market actually, has discounted it somewhat, for sure. But we're pretty confident in it, and we'll sort of see. We'll see about timing with respect to when we'll actually receive that. But that really is the model for us, right? We sell those larger projects because there's no way we'd be able to build $1 billion project with our current balance sheet. Maybe we get there one day, but not today. Take that capital, and then by the time that money comes in, we should be looking at sort of the time frame around these other projects and larger projects where we have an equity requirement to then go and own and operate those mid-sized projects. So it kind of fits quite well from a capital perspective, because this is a capital intensive business, without a doubt. But we're not interested in diluting our shareholders, just to put equity into projects. We think we can develop, flip them, take that capital, and recycle it into new projects that we'll own and operate. Bit more detail here in terms of the actual business model for the sort of two different sets or sections. You've got the utility scale, which is a longer development path, without a doubt. It takes that sort of 2, 3, 4, or 5 years to get to a place where you can recoup an investment, or at least I should say we recoup the investment that we'd like to see. you can sell these projects anywhere along this development path. And so when you look at what we have under development right now, we could exit any number of those projects if we wanted to, but really we want to get to the place where we're selling them for 40 to 50,000 a megawatt, which is what that NG sale basically turned out to be in terms of a metric. So then you're developing 100 megawatt projects, selling them for $50,000 a megawatt. You're talking real money, and you have the ability to then flip that back into the smaller projects. Of course, as a small company, as a micro-cap company, it's not necessarily that interesting to the market or to us to wait 5 years for a return on our investment. And so that's why we also are involved in the distributed generation or smaller project development as well, which I'll get to in just a sec. But just this is a bit more detail on that one large utility project, or I should say two actually, Parker and Bouse. That is a really good, strong example of what we have done and what we can do in the future as well in terms of large project development. And then that distributed generation. So these are smaller projects, rooftop. You look at that project there. That's a perfect example of a project. In that 1 megawatt sort of range, anywhere 500 kilowatts, half megawatt to a megawatt, capital costs of 500,000 to $1 million, $1.5 million. That we put up on the rooftop of a business customer and then sell them electricity under a long-term contract. We don't do the construction ourselves, so we don't take on that construction risk. We outsource that to an EPC firm, that is primarily a commodity these days. So it's not a part of the business that we're really interested in being part of. It's obviously critical though, and having good partners is critical. But it's a really interesting model. We can move fast, and for a lot of these customers, they're seeing access to power as being a key constraint. So if you want to go and build a facility, depending on where you are, the interconnection process to get, say, a megawatt, get 5, get 10 megawatts of power can take years. And so it's not just a question of how much does the electricity cost, but can you get it, and can you get it fast enough to do what you need to do? And you look at data centers and anyone that's involved in AI, they need to move yesterday already. And so while we may sell to them, what's happening is that they are putting pressure on the rest of the system that is allowing us to then step in and help other people who are also going to become constrained, because everybody wants power. So we love these projects as well. They're relatively straightforward to build. It is essentially coming up with a commercial an agreement with the customer. You basically look for a customer that has probably ownership of the building and a good strong balance sheet, and is willing to provide a bit of a guarantee, and away you go. And so we've seen that part of the business grow, and I think you're going to start to see that accelerate over the course of 2025. And again, so if you look at that, this is again sort of what we target. These are ownership, so these are projects that we own. So the metric is a little bit different in terms of we're not looking to sell them, but unlevered pre-tax IRRs of 15% plus are extremely positive returns. You don't see that anymore in large scale utility, without a doubt. Operating assets are in the sort of 8 to 10% for really good projects. So everything has sort of moved down the chain a little bit, right, in terms of where you can find these returns. Can you scale this? Our belief is that you can, absolutely. And this for us is the sort of perfect bite-sized project, something that's $1 million capital cost. We can either finance it with a third party or finance it off our balance sheet. And then ultimately, with anything that we're using on the debt side, we'd go and refinance after they're operating for a year or 2 years, utilizing some mezzanine financing to get them built. Bit about our target markets. We're operating in the US. We have operating projects in Canada and Mexico, but we have development stage projects in all 3 jurisdictions. They all have their challenges at various times. Mexico has just come out of a regime that was, while not anti-renewables, definitely wasn't pro-renewables, but now there has been an election. They've actually just issued some new regulatory scheme that is extremely positive for renewables. So we're going to see, I think, increased activity in both the distributed generation and utility space in Mexico, which is great for us. In Canada, generally, everything is booming everywhere. except Alberta, and I shouldn't even say except Alberta. There are challenges in Alberta, as everyone's probably heard, in terms of that approach they've taken towards renewables. But at the end of the day, it really just becomes a question of where you site projects. Some of the constraints that are on projects in Alberta relate to wind projects that are close to residences, that are close to, primarily close to residences that provide that have issues with visual disturbances, etc. We're developing solar in Alberta. We're developing solar on properties. It's all private property, but on property that are not tier 1 or grade 1 soils. So they're not great for agriculture. So really it's about where you site the projects in Alberta. If you site it in an area where there's community support, where it's not prime agricultural land, because they've clearly prioritized that for agriculture, which is fair enough, then you're going to be able to develop a project. And so we have a project that's moving through the permitting process right now. And, we never want to say that there won't be any opposition to it, but we're out in the community. And so far, we've had really strong response to it. So pretty excited about that. The U.S., of course, is an interesting beast right now, as everyone knows. From a tariff perspective, probably no real threat to us in the short term. In the long term, manufacturing in the U.S. has ramped up significantly, and it has through the last presidency as well, as part of some of the incentives that were in place that required domestic components. And so you're seeing a lot of manufacturing on the solar panel side and on the wind turbine component side. So I don't know that the tariffs will necessarily impact us too much. The question is really one about is how opposed is Trump to renewables generally, and what can he do to stop them? He came out with an executive order related to wind energy as it relates to federal land. So Bureau of Land Management, basically, it's essentially a federal government-owned land that's going to limit that. We have no exposure to that. We're on private property with leases with private landowners. Very little in the way of federal permitting is required. So again, it's a challenge that we need to pay close attention to, but at this stage, we don't see any negative impact on our projects right now in the United States. Having said that, though, where is our focus going to be over the course of the next year? We're going to develop those projects without a doubt. Look at distributed generation in the U.S. because that is really just a business-to-business type of transaction, and there's really nothing the government would do or could do to get in the way of that. Just a bit about the management team again. So Steve, one of the founders, Omar, one of the founders, myself, I joined, as I said, about 4 months ago. Long history in renewables since about 2006. Also a little bit of mining experience as well. And was a journalist before that, actually. Coming out of university, was a reporter. So a long and varied career, but really since 2006 have been involved in resource development, renewables, and renewables on the public market side of things, of course. You can look at the track record there. This is what we've done historically over the course. We've talked a lot about those the big wins that we've had previously and what we're gearing up to do in the future as well. And then, our cap structure, as Paul mentioned, 63 million shares outstanding, pretty tight structure, which is good. About 55 to 60% closely held insider management and insiders. So really tightly held. Any options are at 50 cents. So I joined, my options are at 50 cents and we're trading 21, 22. So I think that gives people an idea of where we think this company should be, but also where it's going. So definitely strong alignment with between shareholders, potential investors, and our current shareholders in terms of, we are not looking to dilute this company down to nothing. Just to bring some cash in the door. That's why it's critical, obviously, for us to have that recurring revenue as well. Good, strong, stable recurring revenue base with significant upside that meets, the demands that we're seeing right now in the industry. And the key catalyst, if I look at sort of the things that are going to be happening to get this year, it's hard to put it all on one slide, to be honest, because we have 2 projects in the U.S. that'll hit significant milestones this year. We have a project in Canada. And these are all larger utility projects that'll hit significant targets this year. We now have development stage projects that total about 500 megawatts in Mexico that are now ramping up because of the change in government that we're going to see significant milestones on this year. Absolutely, on the distributed generation side of things, we're going to be signing and building new projects and getting those up and operating and adding to our recurring revenue. And then, of course, stay tuned on M&A. We're pursuing opportunities, both operating assets and development stage assets or pipeline as well. And so I'm confident that we're gonna get close to getting something across the line this year on the M&A front as well. We think that's critical for us to take that sort of leaps and bounds steps in terms of revenue and growth. And so that's kind of the overview. Happy to open it up to questions or however you want to run with it, Paul.
Sure, Myke. Reminder, everybody's listening, as always, if you have a question, please use the chat function, and I'll make sure that Myke gets a chance to answer it. Myke, you had a slide up there, $2.6 million in cash, US dollars, $10.1 million in debt. I don't believe you're profitable right now. Correct me if I'm wrong, but at what level do you need to get to be profitable? And then second part of the question is kind of what do you see as your cash requirements going forward here?
Yeah, okay, good questions. So last fiscal, we were profitable to the tune of, I think, 2.4 million, give or take, net income. So if you think of what gets us to profitability, there is the recurring revenue piece, which is we would not be profitable based on the recurring revenue piece. But then that last year, there was also about 3.5 million in milestone payments from asset sales. So understand that those always could come during the course of a year. Obviously, until they happen, we don't announce them. But for Q1, we're in a loss position. Again, as a development stage company, you're always in the position of determining, how much you spend on development assets. Could we scale things back right now and be almost cash flow positive? Pretty close, I think we could actually, but we don't want to. And so the cash question is like, in terms of what we have on the balance sheet right now, I think it's probably it's over $1 million for sure. We're not cash constrained, but we could always use more cash for development activities. So the metrics or the question for us is, what is the cost of capital? What is the best way for us to access that? To get through the end of this year, if we want to advance everything as fast as possible, we probably have additional cash needs of, maybe $1 million to $2 million or something like that. But that doesn't mean we need to go out and raise that capital, in a private placement or anything. We have the ability to sell assets without a doubt and bring in some cash that way. We have the ability to, and that's assuming we're going to do everything at full speed, right? Mm-hmm. Project development is such that you are always assessing whether or not it makes sense to spend on this permit, on that permit, on any given day. So it's a hard question to answer because we basically make those sort of we do that assessment on a week-to-week basis, basically, with respect to our development pipeline. I would say, the overarching message, though, definitely is we're not cash constrained. But we can always use more cash, right, to accelerate what we're doing right now. Just probably not at these prices, right?
Mm-hmm. I gotcha. Let's talk about the sort of project generation side. Like, how do you go and determine what projects to do? How do you find new projects to get involved in?
Yeah, so there's a couple different ways. Historically, we have done two things. It's either greenfield development, which is essentially you are looking at a map, and it is as simple and as complicated as this. Looking at a map and determining where there is a resource. So where is it windy? Where is it sunny? But also where is there a route to market for your product? So for the power. So for instance, just because it's windy in my backyard doesn't necessarily mean I'll be able to build a big wind project because I have no way to get it to an end customer. There's no transmission line that runs through my backyard for a big enough project. So you need to have access to transmission. but you also need to have access to transmission capacity. So just because a big line runs past your project doesn't mean you can necessarily interconnect to it, because it may already be full up with other projects and other electricity sources. So all of that is combined into sort of a matrix where we determine, look, we like a market, we like Ontario, say, let's go and look at this matrix, determine where we want to focus our energies, start talking to landowners, start talking to the utility, try to determine as best as we can where there's available capacity, where there's a resource, put that all in the hopper, and see if we can't come up with something. And then you have basically this portfolio or pipeline of projects that will just advance at different stages. And this is why you need essentially a portfolio of a couple gigawatts, because any given year, one will move forward faster than you thought, and one will move forward slower than you thought. So having that diversification helps. So that's really what you do. And then ultimately you go through a process of permitting it. You go through a process of going through interconnection. So applying to the Interconnection Authority in BC, it's BC Hydro, Hydro One, or ASO, or ISO in Ontario, depends on where you are. And then you look for someone to buy your power. So who is the off taker of it? Again, in a place like BC, it's just BC Hydro. In other areas, you can do virtual PPAs where you sign a PPA with Facebook, anyone who has access to that transmission system. So that's greenfield development. That is, you get the best return for your dollar on that type of development, but it also takes the longest. We also have acquired mid-stage projects. So the project in Alberta, it's called Bright Meadows. It's just south of Edmonton. It's 15 megawatts, so capital costs around $20 million, give or take, very rough number. That project we acquired at a later stage of development. So someone had already gone in there and done the work of assessing the capacity of the transmission line, signing up landowners to option agreements, basically done all that sort of preliminary work to say, you know what, we could probably build a project here, but we as the smaller developer can't do that. Let's sell it to someone like ReVolve. So we acquired that for $100,000 basically. They would see success fees once that is built, but that's really just part of the CapEx. And so it's a really good way to go about it as well. But your returns aren't quite as strong as they are from if you're doing it yourself. So we have a couple projects like that. And then of course there are operating assets that we've acquired as well. We have not developed any projects from soup to nuts yet ourselves, other than the ones that are distributed generation. So those rooftop solar assets, we've absolutely done that from inception to construction, build it, own it, operate it. The other operating projects here in BC, the run-of-river and the wind project in Alberta, we acquired as operating assets. So again, that is really just being in the market, understanding who is looking to sell projects because there may be non-core assets. If it's a bigger developer, they're looking at a 10 megawatt project or something. They're like, look, we have a gigawatt of projects. Doesn't make sense for us to keep this one. For us, perfect project size, we go after that all day long to try and acquire those types of projects. So sort of those, it's either through greenfield development where we do all the work ourselves, or through acquisition at varying stages of the project development.
And I mean, this kind of ties to the other question I was going to ask is in regards to like the different stages, obviously the value of the projects are different based on how far you've gotten. And there was a slide there, and unfortunately I wasn't fast enough to write it down, but like, what are these stages worth? What is sort of I'm trying to get an idea of what your assets are potentially worth right now at the current stage, and what does it look like when it's complete on your end?
Yeah, exactly. So let me flip back to this slide here. So I think this is the one you're referring to. Do you see that?
Yeah,
okay?
That's the one. Yeah, 40 to 50K.
Yeah, exactly.
Yeah, okay.
So this is all, as with anything, it's a negotiation. So it depends on who is buying the project, why they're buying it, if they are motivated for reasons other than just price to acquire projects. So for instance, they're looking to get into a certain jurisdiction, a certain region, or they're looking to exit it because they don't want to be there anymore. So the price could be lower. So that sort of 50K per megawatt is kind of the high, the point at which we think we extract the most value without getting into construction, without getting into project finance, without taking on any of that risk. And so what you can do is you can absolutely sell the project down here at stage 2, and then you just get more of this essentially as milestone payments, right? So the farther you are along this development path, really the more cash you can get up front. So if you sell a project here, you know, you can get that 50K, but it'll be pretty much all when the project is operating. So is there a lot of value to that? You're basically putting the project in someone else's hands. And so really, as an acquirer of projects, we try to push out the payments as far as possible. You know, if as a seller of project, we want all the money up front. And so it becomes a negotiation without a doubt. But that's kind of the mix there. So if you were to look at our portfolio, we don't put this out publicly yet because we're kind of still working through it. Like, what is the sum of the parts valuation of our portfolio? You know, we have 3 gigawatts. That's 3,000 megawatts. Are we going to say that the valuation is 50,000 a megawatt? No, because they're not all late stage, right? And actually, I'm kind of reluctant to even say a number because we're working through that, and it's one of those disclosure things that we kind of want to be perfect on in terms of the number. But it's a significant amount. You know, you look at a 100 megawatt project, that's $5 million. We have advanced stage projects that are getting close to the stage where we could sell them for that price, right? Is it 100% upfront? Probably not, but we have multiple projects. So I can safely say that the sum of the parts is greater than our market cap, for sure, in my opinion, right? Now, we'll put out some information on that in the not too distant future, for sure, because I think it's important for investors to understand what the underlying asset values are. And that's just in addition to all the recurring revenue or the operating assets that we have. So this is a good metric to look at. You know, the earlier you sell them, less you get, the more you push out towards the back end. And you saw that with that NG. The reason that one's so interesting is because of the scale of that project. I mean, that was a 1.25 gigawatt project. And so it was, you know, it is heavily weighted towards the end because with a project like that, what we had done the initial development work. We had the interconnection, which was critical on all of these projects. Once you have that, the value just kind of shoots up. And so the size of that project is what is driving the big dollar figures. Even with, you know, even getting like, say, 10% upfront or something or whatever the number is, that still is being like, you know, 60 or 6.5 million US already received to date, right? For a project that now we have no responsibility for with respect to development costs, definitely not capital costs as the project gets developed. So it's a good model, you know, in terms of being able to flip those types of projects and get a return while also developing smaller projects a little bit faster, so we can get to that to get to revenue quicker.
I mean, listen, the reason I sort of brought that up is we saw not too long ago, we saw a company called UGE International get acquired. Maybe let's talk a little bit about that. How similar are you to UGE? I mean, they got a pretty significant premium based on assets that were under development like this. So I'm trying to sort of lead you on a little bit to try to understand what the upside could be if this were, you know, acquired by somebody else.
Yeah. So it was an interesting valuation. I think the market was surprised by it. I wasn't particularly surprised. I know the company well, and I sort of know the underlying assets. You know, for a company like ours, you know, people always say they're undervalued, but without a doubt, like in terms of the projects that we have under development, the value of those assets right now, without a doubt, were undervalued, as UGE was as well. So a bit of a comparison. So our models are a little bit different in that the types of projects they were building out it's what's called community solar. In many respects, it looks the same to most people, right? The difference is in sort of the financial, how they're built and the financial structure around them as well. But projects in the sort of 1 megawatt to 4 or 5 megawatt, very similar to what we want to own and operate. Community solar, they aggregate a bunch of individual residential homeowners into a pot or a pool, basically, and then combine those and then sell the electricity to those individuals. That's usually sort of how it works in a very simplified way. UGE, because they're primarily 100% in the US, they were utilizing tax equity structures as well, which brings in some equity because there are tax credits that are available if you have tax appetite. They didn't, so they bring in a tax equity investor. And so I think the market saw their cash flow, their immediate cash flow, and they're like maybe underwhelmed, not realizing that the cash flow was significantly increasing over the course of the next year to 2 to 3 years, exponentially, right? Which is, I think, what we're going to see as well. And I think the public markets just didn't have the patient support with them. I don't know. Right. And so, but private equity did, right? Private equity was like, yeah, you guys are worth 4x this for sure. And so it was a really strong deal for them. And, we get this question a lot, like, what do you think your value is? Could you be taken out at 4x or something like that? And I really don't comment on that kind of thing. But I think it was an interesting valuation that kind of opened people's eyes to the value of these types of projects. You look at the revenue comparison. I mean, if you were to compare our revenue to theirs, we have significantly more revenue from when they went private. We have a pretty nice big pipeline. So I think we compare quite nicely to them with respect to underlying value. But we are different companies just with respect to the types of projects and how they're structured. But they're a good example to take a look at without a doubt. I like the company. I like what they did, and I understand why they went private as well. But we love public markets, and we're 100% confident that these sort of tumultuous times that we're in right now, we're going to turn around. There's going to be a bit of a turn back to risk. I think, and we're going to see the benefit of that, is my firm belief, for sure. So.
Excellent. So let me go back a little bit to one of the questions I asked you earlier in regards to break even, like in the recurring revenue that you guys have right now. If we assume no sales or asset sales of that kind, where do you have to be to basically break even? I guess what's your annual SG&A right now?
So that I'm gonna have to beg ignorance. I'm not, because I haven't broken that out between our development costs and G&A. I'll be honest with you. Okay. And so I'll definitely follow up with you if that's okay.
That's fine.
Because such a large part of our spend relates to development costs for project as opposed to salaries, what we call generally G&A. So I don't have that off the top of my head, and I apologize for that.
That's fine. Okay, well, I got a question that came in around staffing. Like, how big is the operation right now as far as staff? How hard is it to get staff when you need them? I appreciate that a lot of the work is likely consultants or contracted out, but what can you tell us about the staffing?
Yeah, so definitely some of it is contracted out. It depends on the type of activity. We have 3 people here in Vancouver. So myself, our CFO, Tanya Ontiveros, and a developer, a junior developer, basically, who does this sort of development work like we're talking about here on these utility scale projects. So 3 of us here in Vancouver. And then right now, I think about 17 people in Mexico City. So the bulk of our operations are in Mexico. And so there we have some legal, some marketing help, and then project developers, as well as our engineering team, who does the work on both the utility projects and the distributed generation. For us, we outsource basically things that are commodities, essentially, right? The construction of a project, we'll run an RFP for the EPC or whoever that is, and then we'll just outsource that to them. We outsource certain wind energy assessment reports, like the highly technical assessment reports. But in terms of all the modeling, in terms of the layout, the financial modeling, we do that all in-house, without a doubt. So that's definitely part of our skill set, because it's something that we use on the development side, but it's also something that we use on the acquisition side as well when we're assessing potential acquisitions. So in terms of labor being a constraint, The biggest constraint for us, we always need good people without a doubt. But we have a pretty solid and tight team right now, right? So I wouldn't say that we're particularly constrained. As we go forward, the sort of more technical components. So, having more people build out the engineering team, that can be a bit of a challenge at times, finding not just qualified engineers, but people who have done this and in the renewable space have built these types of projects before. And as we look towards owning and operating larger projects, building out that engineering team and operations and maintenance team is something that sort of we think about now, even though it's not going to happen for another year. So yeah, there's always challenges, but I wouldn't say that's our biggest challenge, to be honest. Right now, the thing that keeps me awake at night is what is Trump going to say to impact our share price? You know what I mean? Like it's one of those things that the markets right now are so volatile that while it's not really impacting us on a business level, people think it is, right? And so this is why it's important, to get out and sort of talk through these issues with investors, right? With stakeholders and shareholders, because, Trump makes a lot of noise and it impacts the market without a doubt. Like if you look at sort of solar stocks, if you look at renewable stocks, generally when he got elected, everyone went in the tank, and it's sort of kind of drifted back up again. But, only certain segments of the industry are actually being impacted, right? And so for ones that aren't, and especially ones that are, smaller like us, it takes a bit of time for the realization to occur that, actually there's an opportunity here. And maybe these guys are perfectly positioned to take advantage of it. So that's kind of what keeps me up at night. Honestly, access to capital is always a challenge as well. But we have a pretty good system in place where we sort of acquire that mezzanine financing. We actually refinanced a big chunk of that as well. Was it earlier this week or last week? We put out a release on it. So we refinanced some debt with Van City. And so, if anyone takes a look at some of our historical press releases around how we finance these, if we have $1 million project and we can't do it on our balance sheet, we'll go to someone to provide that construction/mezzanine debt to build it out. And it's usually expensive money, I'll be honest, like 10-12%, but it's really only in place for a year. And this was the case with one of our acquisitions. It was $4 million at 12%. It was just out there for a year. Refinanced it with Van City at closer to 9%. And really that all just hits our bottom line. And that's the first one that we've really done as a company. We've done it individually before. But if you look at where we're going to see optimization, that cost of capital is going to come down for us without a doubt. Like that 9% number, you would think the next one's going to come down a little bit more as well as we strengthen our balance sheet, as we illustrate to various banks that we've done this before and we can do it again. So all of this is sort of the maturation of the company. And that's why it's a really interesting year, because all of these things are coming together at the same time, both our ability to source non-dilutive capital, but also the projects that are going to require it. So it's all coming together.
Hey, let's talk about a couple of things you kind of brought up there. First off, you operate in 3 different jurisdictions. So I imagine there's likely 3 different sets of, let's call it government initiatives or even incentives. What does that look like right now? And of course, the chatter of the US is that might sort of go away or become more difficult. Maybe what does that look like for you guys right now?
Yeah, so we'll start with the US. The primary incentive there is the investment tax credit. So what is currently a 30% tax credit. So essentially it's a dollar for dollar reduction on your tax bill. So if you buy $1 million or you own $1 million solar system, 30% of that CapEx is a reduction in your tax liability. If you don't have a tax liability, you can either sell that credit, for 95 cents on the dollar, or you can sell it, or you can bring in a tax equity investor who comes in basically as kind of debt. It looks like debt, but it's basically as an equity investor. They take all the benefit of that, and you have relatively cheap capital. So that ITC is interesting. It's 30% right now. It does scale back it was renewed for 10 years to 2 years ago, 3 years ago. The last 3 or 4 years would scale down to 20, 15, 10%, I think. So it was going to scale down anyway, tail down. There hasn't been anything direct from the White House about the tax credits. There's always a risk there, but if you look at who benefits from the tax credit and who benefits from the manufacturing that has been spurred because of it, because a lot of it is dependent upon to get that tax credit, you need a certain domestic content. To get additional credits, you need content. You need to be operating in usually low-income areas. There's a bunch of criteria, but they all benefit red states, right? It's people think renewables, Trump's attacking it, and it's all just like New York and California. Yeah, those are big states, absolutely for renewable. But the growth is happening in red states where you have manufacturing plants for solar panels, manufacturing plants for turbine panels. The ITC goes away, all of those plants shut down. And I just look at the sort of political risk that he would take, and I don't think it's going to happen. I think it may scale down a little bit faster than what was planned under Biden. But the reality as well is that these tax credits are really sort of they lit a fire under the industry for sure. Are they absolutely necessary everywhere? I don't think so. That tax credit it's actually in place now in Canada, and I'll touch on that. Wasn't in place in Mexico, wasn't in place in Canada, still have tons of solar, still have tons of wind. There's no direct subsidies. So it still works, right? But do you want to drive local manufacturing? Do you want to drive an industry? That's what the US has done, and they're global leaders for it. So I don't see a huge risk there. We could still make the case for a business, without a doubt, without that tax equity or without that ITC. But given who benefits from it, I don't think there's a huge risk. But you never know with Trump, right? Again, it's not one of those things that keeps me up at night because first and foremost, we have a pretty diversified portfolio. We don't actually have anything operating in the US right now. And so that's kind of a benefit for us. If you look at Canada now, so Canada has implemented that same 30% tax credit, which is great. Not a lot of publicity around it. And I think people are just starting to actually claim it. It's been in place, I think, for at least 6 months, maybe a year. But CRA sort of takes their time in terms of issuing the actual regulations around it, what qualifies, what doesn't. But that's all in place now. And so now if you're building a project, the owner of the project, you'll see that benefit. So that'll improve the economics for any project in Canada, without a doubt. There are no other real incentive plans in Canada. There are incentives that sort of drive the industry. So for instance, EV, electric vehicle incentives, increases electrification. Does that benefit renewables? Yeah, probably, but it's not direct. Same with heat pumps. The electrification of everything, I think, benefits renewables. But it's not a direct subsidy, without a doubt. I don't think any provinces right now have any direct subsidies. Ontario runs an RFP where you're competing against natural gas plants. You're competing against nuclear, if anyone can get that across the line. So it's a competitive process. Like the days of really expensive contracts in Ontario are long gone. But they're still economic, right? It's still the cheapest form of generation. In Mexico, there are no incentives. And so, we don't rely on incentives at all. We essentially rely there. It's a little bit different because, again, high power prices. So, you can go in there and show them a savings and actually put in place a contract where we share the savings. So we're basically guaranteeing you a savings, and we'll take some of that upside. But also access to power. Again, there are areas where they just cannot get the utility to build a power line for them, and so how do you alleviate that? Well, you build your own solar system, build your own generator, right? Either a combination of battery storage, potentially generators, or solar. Probably not wind, just because of the size of it, but we can build a solar system to offset 30-40% of their electricity demand in 3 months, right? They don't have to worry about going through a year or 2 year long interconnection process, and it's cheaper. So there are definitely different incentive structures in different states as well, but the primary one in the US being the ITC. And while it's always a risk, it's not something I see getting attacked anytime soon. So yeah.
Gotcha. Clearly lots going on for you. 2025, if we're to look forward, what do you think are the sort of the things that investors should really watch out for?
Yeah, so without a doubt, look for sort of four things. One absolutely is our utility scale project milestones. So these are the projects: the Alberta 15 megawatt project, the 50 megawatt project in the US, and the battery storage project in the US as well. Those are all in various stages of development and permitting. So you'll see news flow about those. And all three of those projects, the goal is to get them to ready to build status by the end of this year. So a lot has to happen in that period of time. But we get to that stage of ready to build, and we're basically making an investment decision. Are we building and owning these ourselves, which is the goal, or are we doing something else with them? So that's where we're going to see like peak value for those development stage projects. And then we get into essentially the construction phase of those projects, either late this year or into 2026. The other is an expansion of our distributed generation. So those rooftop solar primarily and battery storage that we're selling to individual businesses, you're going to see news on contracts that we're signing on those, the build out of those projects, and then the operation of those projects as well. And then beyond that, M&A activity. You know, without a doubt, it's a key focus of ours right now to expand our either portfolio or portfolio of operating assets. And so I'd say stay tuned on that. That'll just happen out of the blue, without a doubt. But it's something that we're definitely pursuing. Those other ones, you'll see that sort of consistent news flow around it, without a doubt. You're going to see what you won't see. You won't see the additive, the incremental additions to the revenue until we get to the quarters, obviously. But that's growing all the time. Projects are coming online, and we're adding to the revenue all the time. So keep that in mind when people look at our revenue numbers and things like that. It's not going to just go like this. It is essentially going like this almost every single month. So it's very positive.
Fantastic. Myke, did we miss anything? Is there anything that I should have asked, or is there any key message you want to make sure everybody walks away with today?
I think that is about it. You know, I think the underlying message for me really is there's actually a couple other questions. Should I answer them if they're in the chat?
Sure. I mean, I think we covered a few, but there's a couple I just got.
Yeah. Oh, and then the government grants. Yeah. So I think I talked a little about that. Talk about competition. Yeah. So competition, happy to talk about competition. There's sort of two sides of our business, as I've described. On the utility side, those bigger projects, our competition would be other developers. So people that are looking for projects like we're looking for. You know, the interesting thing about where we are in the marketplace is there's not a lot of competition because of the size of projects that we're targeting. The big players all want 100, 200, 300, 400 megawatt projects. They want to deploy $1 billion. For us, it is a size of project that there's not a lot of competition because the smaller players in the marketplace are looking to sell those development stage assets, but the big players aren't really interested in buying them because they're too small for them. But for us, you know, as a 15, 20 million market cap company, you know, a 30 or 40 million capex project is perfect for us in terms of the equity slice and our ability to grow really fast. And so we don't see a lot of competition on that front. There is always competition to sell the electricity from those projects. So it's not necessarily acquiring the projects. It's how do you get that electricity to market? I think I've talked a bit about, you know, why we fall into a pretty interesting niche area in terms of distribution, smaller projects, easier to get online, which is, you know, why we're focusing on that area of the business. On the distributed generation side, again, it sounds odd to say this, but I don't think we have any competition. There are very few people doing this right now. When we talk to customers, they are not getting multiple quotes. They're not going out to other distributed generation commercial solar companies. There are a lot of commercial solar companies out there right now that will sell you the project. There's not a lot that will do what we do, which is do the sale, the design, the engineering, and own it and just sell you the electricity. So there's an opportunity for us to grab market share here while there's not a lot of competition.
Fantastic, Myke. This has been great. This is our first chance to really talk about ReVolve Renewable Power. So folks, we've been speaking with Myke Clark, of ReVolve Renewable Power, symbol REVV. Thanks for joining us today, Myke, and we're certainly going to follow you closely, see how things progress.
Thanks. I appreciate it, Paul. And thanks to everyone. It was great to talk.
Awesome. Bye for now.
Take care.